Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest time updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 10 a.m. and 6 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, today we need to talk about something that honestly feels bigger than price itself. Because while everybody online is distracted by short-term candles, leverage wipes, and panic headlines, something much larger is happening underneath the surface of the financial system. And if you understand this shift early, it could completely change how you view XRP, the anointed one, and the XRP ledger, and the entire real-world asset narrative moving forward. We're going to break down the Goldman Sachs clarification that most people completely misunderstood, the SEC development that could reshape tokenized finance, why real-world asset tokenization just crossed a number that should make institutions pay attention, and finally, the XRP chart itself. Because at $1.37 with RSI sitting near 44, the market is telling us something very specific right now. And trust me, most people are reading it wrong. But before we jump in, hit that like button if you enjoy macro-driven crypto analysis that actually connects the dots instead of chasing hype headlines every 5 minutes. Now let's get into this. Goldman Sachs and the headline nobody understood. So first, we need to correct something from yesterday because nuance matters here. And in markets, nuance is often the difference between panic and opportunity. Yesterday's headlines exploded across crypto Twitter claiming Goldman Sachs reduced exposure to XRP and Solana ETFs. Immediately, people interpreted this as Goldman's bearish, institutions are dumping, smart money is exiting. But that's not what happened, not even close. Here's what happened, actually. Goldman Sachs operates massive market making and prime brokerage desks. Those desks exist to facilitate institutional client activity. That means if large clients want ETF exposure, Goldman may temporarily hold inventory to create liquidity, facilitate settlement, or manage order flow. This is how traditional finance works. The holdings were never necessarily directional bets. They were inventory positions. And when clients' demand shifts, inventory shifts too. That's it. This happens constantly in traditional markets. BlackRock does it. Fidelity does it. Large banks do it every single day. But here's where it gets interesting. Crypto media often reports institutional movements without understanding how institutional plumbing actually functions. And that creates emotional reactions from retail investors who think every movement equals a bullish or bearish conviction call. It doesn't. In many cases, it's operational. And this distinction matters because it reveals something deeper. Institutions are increasingly involved in crypto market infrastructure itself. That is the real story. Not whether inventory moved up or down over reporting period. Now, this is what most people miss. When Wall Street firms begin operating as liquidity facilitators instead of simply speculative participants, it means the asset class is slowly integrating into financial architecture. Write that down. That's a structural shift. Short-term noise, long-term structure. And we've seen this movie before. Back in the early days of the ETF market itself during the 1990s and early 2000s, many traditional investors misunderstood how ETF creation and redemption worked. Large inventory swings were often mistaken for conviction trades. But over time, ETFs became foundational infrastructure for global capital markets. Today, trillions flow through them seamlessly. Crypto could be entering a similar infrastructure phase right now. Not the final phase, but an early institutional integration phase. And that changes the lens entirely. The SEC development that could change everything. Now let's move into that story, because honestly, it deserves far more attention than it's getting, because this one directly impacts the XRP ledger. Bloomberg reported that the SEC is preparing a possible innovation exemption framework for blockchain-based trading systems involving tokenized securities. That sentence alone is massive. Let me explain why. For years, the crypto industry has operated under uncertainty. Regulation often felt reactive instead of constructive. But now, for the first time, we may be seeing the SEC explore pathways that actively accommodate blockchain-based financial infrastructure. That is a completely different posture. And if this exemption framework moves forward, it could open the door for tokenized U.S. equities trading on compliant blockchain platforms. Think about that carefully. Apple shares, Tesla shares, ETFs, treasuries, money market funds. Trading 24 hours a day, settling nearly instantaneously, moving across blockchain rails instead of legacy infrastructure. That is not a small change. That is a redesign of market plumbing. And this is where XRP and the XRP ledger enter the conversation, because the XRP ledger was literally built around efficient settlement infrastructure. Now, before we connect those dots, we need to zoom out historically for a second. In 1971, the United States officially ended the Bretton Woods monetary system. That decision fundamentally changed global finance because it transformed how value moved between nations. The world shifted from gold-linked settlement systems towards fiat-based liquidity systems. It wasn't just a policy adjustment. It changed financial architecture itself. Today, blockchain-based settlement may represent another architecture shift, not necessarily replacing traditional finance overnight, but gradually modernizing how assets move. And when infrastructure changes, entire industries change with it. That's the real significance here. Why tokenized stocks matter. Now let's break down the mechanics. Why are tokenized stocks such a big deal, you're asking? First, 24/7 markets. Traditional exchanges close. Crypto doesn't. Tokenized assets on blockchain rails could theoretically trade around the clock. That alone changes liquidity behavior globally. Second, settlement speed. Traditional equities still rely on delayed settlement cycles. T+1, sometimes T+2 internationally. Blockchain settlement compresses this dramatically. Second, instead of days. Third, reduce friction, fewer intermediaries, lower operational costs, potentially broader global asset. And fourth, programmability. Assets become composable inside digital ecosystems, collateral systems, DeFi integrations, cross-border movement. This is where things become transformational. Now, this is what most people miss. The tokenization narrative is not really about speculation. It's about efficiency. Institutions do not care about memes. They care about cost reduction, settlement efficiency, liquidity optimization, and operational scalability. That's what blockchain offers, and XRP's design aligns extremely closely with those needs. Why the XRP ledger fits this narrative? Let's connect the dots directly now. The XRP ledger already has several characteristics that fit tokenized asset infrastructure exceptionally well. Built-in order books, fast settlement, low transaction costs, and increasingly interoperability tools. Plus, the addition of automated market maker functionality, expanded liquidity capabilities even further. This matters because tokenized equities cannot function efficiently without fragmented liquidity and wide spreads. Institutions need deep liquidity environments. The XRP ledger was designed around efficient value transfer from day one. Now let's talk about settlement specifically, because this is Ripple's core strength. XRP's transactions settle in roughly 3 to 5 seconds. That's increasingly fast compared to traditional settlement infrastructure. And if tokenized securities begin moving on-chain at scale, settlement efficiency becomes one of the most important competitive advantages in the system. That's massive. Write that down. Now layer RLUSD into the picture. Ripple stablecoin potentially acts as collateral, settlement currency, or liquidity infrastructure alongside tokenized assets. This creates an ecosystem effect, not just a single asset use case. And this is where the conversation becomes much bigger than simply, will XRP price go up? Because price is downstream from utility expansion. Price reacts, systems evolve. That distinction matters. The real-world asset explosion. Now let's get to the numbers that should really grab your attention. Real-world asset tokenization on the XRP ledger recently crossed approximately 3.53 billion. Just months ago, that figure was under 1 billion. That growth rate is not normal, and it signals something important. Institutions are experimenting. Treasuries, money market products, real estate exposure, carbon markets. These are not meme assets. These are components of traditional finance moving onto blockchain rails. Now, does this guarantee XRP dominance? Of course not. There are competitors everywhere. Ethereum, Solana, Avalanche, private institutional chains. But the XRP ledger already has infrastructure, regulatory positioning, and settlement characteristics that make it highly relevant in this race. And relevance matters, because large financial transitions rarely happen all at once. They happen gradually, rail by rail, institution by institution, use case by use case. The internet itself evolved this way. At first, many people thought it was niche. Then business adopted email, then e-commerce, then streaming, then cloud infrastructure. Financial tokenization could evolve similarly, slowly, then suddenly. The Ondo connection. Let's talk about Ondo, because this is another piece most people are underestimating. Ondo is targeting tokenized traditional finance products, treasuries, yield-bearing assets, institutional-grade financial instruments, and Ripple partnering within that ecosystem is not random. There's strategic logic behind it. Because if tokenized finance expands into a multi-trillion-dollar market over time, liquidity infrastructure becomes incredibly valuable. Not just assets, infrastructure. An infrastructure business historically becomes some of the most dominant businesses in the world. Railroads did this during industrialization. Internet protocols did this during the digital revolution. During the Roman Empire, roads became one of the empire's greatest strategic advantages, not because roads themselves were glamorous, but because they enabled commerce, military logistics, communication, and economic expansion. Infrastructure multiplied the power of everything connected to it. Modern financial rails operate similarly. The entity controlling efficient movement often became more important than the assets moving across the system. That's why investors are watching tokenization infrastructure so closely. Now let's shift gears and talk about the chart itself, because regardless of fundamentals, price still matters. Currently, XRP is trading around $1.37 with RSI near 44 in the daily time frame. And honestly, this is one of the more interesting setups we've seen in months, because the chart is not screaming immediate breakout, but it's also not signaling collapse. It's signaling compression. Let's zoom out. Back in the summer, XRP peaked near $3.65 before experiencing a brutal sell-off. Since then, price has largely consolidated between $1.20 and $1.65. This is classic range behavior: chop, indecision, compression. Now, here's the important part. Markets often spend more time consolidating than trending. That's normal, especially after major volatility events. RSI sitting near 44 tells us momentum remains weak but not exhausted. Oversold conditions usually occur below 30. We're not there yet, so this isn't a screaming value reversal signal, but it also means panic may still be premature. Now, this is what most people miss. Extended consolidations can act like pressure chambers. The longer price compresses within a range, the more meaningful the eventual breakout or breakdown often becomes. Think of it like tectonic pressure building beneath the Earth's surface. Eventually, something gives. That question is direction. Let's start with the bullish scenario. If XRP continues holding the $1.20 to $1.25 support zone, buyers may eventually regain momentum. A successful reclaim of the $1.65 area would likely shift market psychology significantly, because that level has acted as a major resistance throughout consolidation. A breakout above that region could open pathways back towards higher macro zones around $2 to $2.30. Now combine that with potential catalysts, regulatory clarity, tokenization growth, international expansion, institutional settlement adoption, SEC accommodation framework. Suddenly the macro narrative becomes much stronger. And remember, markets move ahead of certainty, not after certainty. But by the time adoption becomes obvious to everyone, much of the repricing may have already occurred. Let's talk about the bear case. Now we need to stay balanced, because there is risk here. If XRP loses the $1.20 region decisively, momentum could deteriorate quickly. RSI could slide toward oversold territory near 30. And psychologically, markets may begin targeting the dollar area. Would that feel painful short term? Absolutely. But structurally, deeper corrections sometimes create stronger long-term foundations. We saw this repeatedly in previous crypto cycles. Violent shakeouts before larger expansions. And that brings us to another important distinction: temporarily volatility versus structural direction. Short-term price action is emotional. Long-term infrastructure development is structural. The two don't always move together immediately. That's why some investors obsess over daily candles while institutions focus on 5 to 10-year infrastructure positioning. Different time horizons create different interpretations. The bigger picture. Now let's zoom out one final time, because the biggest takeaway from today is not whether XRP moves 10% next week. The bigger takeaway is that financial architecture itself may be entering a transition period. Tokenization is growing. Settlement systems are evolving. Regulatory frameworks are slowly adopted and adapted. Institutions are experimenting. And whether XRP ultimately dominates or simply participates meaningfully is clearly positioned inside the conversation. That alone matters. Now, here's the second historical analogy. During the early Industrial Revolution, many people focused entirely on the companies producing finished goods. But over time, investors realized something critical. The real winners were often the infrastructure layers underneath: railroads, steel production, electric grids. The systems enabling economic expansions became foundational value layers. Blockchain infrastructure could follow a similar trajectory. Again, not guaranteed, not overnight, but structurally possible. And if tokenized finance truly expands towards trillions over the next decade, the market may eventually place enormous value on efficient settlement infrastructure. That is the macro thesis many XRP investors are watching. So let's recap everything. Goldman Sachs reducing ETF inventory. was not necessarily a bearish directional bet. It was likely operational market-making activity. The SEC innovation exemption discussion could become one of the most important developments for blockchain-based securities infrastructure in years. Real-world asset tokenization on the XRP ledger has exploded past $3.53 billion in a remarkably short time frame. And XRP itself remains locked inside a major consolidation zone with key support levels now becoming extremely important technically. Short-term noise, long-term structure. Prices reacting, systems evolve. And that's the lens you need right now. Because while social media focuses on hourly volatility, institutions are increasingly studying infrastructure, settlement, liquidity, tokenization, interoperability. That's where the long-term battle is happening. Now, I want to hear from you. Do you think the SEC tokenization framework changes the long-term outlook for the XRP ledger? Do you think tokenized equities eventually become mainstream? Drop your thoughts below. If you got value from this breakdown, hit the like button because it generally helps the channel more than you think. Subscribe if you're not already. And as always, this is not financial advice. Never has been, never will be. Do your own research. I'll see you on the next one. Well, ladies and gentlemen, what we saw today in the market is more of the same. One little tweet moves everything. And then another tweet will move everything back the other way. Learning to navigate this situation and not get cut up like sushi is a skill in itself. I think that there's way too many distractions right now. People aren't paying attention to the most important things. I don't. I think when Operation Predator, when it begins, paying attention to the treasury yields, paying attention to the most boring parts of finance that nobody pays attention to is like changing the oil on your car every 3,000 miles. If you do that, your car will run forever. But you know something? Through all of the chaos here, through everything, I've never had more Gucci conviction, Gucci clarity ever. These are the days that being a financial mercenary we dream of because it's almost too easy. It really, really is. They're going to write about this in history books, really, about what went on in these time periods when things changed. The biggest things to pay attention to right now is the commodities market. That's the most important thing right now. Commodities and the utilization, consumption, and distribution supersede anything that can happen in finance. Always has, always will. The commodities market that I started in for the New York Mercantile Exchange when I was 15 years old is telling a very compelling story for those willing to listen. For me, and everyone that retains myself and our organization in any capacity, we've been preparing for this before the first problem in the Middle East with this ongoing drama. When you take advantage of all the metals for what they're worth, that tells everything. Shouldn't shock anyone who's long-term viewers of the channel here because we spoke about all this. But what it's telling us is that the changes are coming. I want to ask everyone here something, right? And please drop it in the comments below. Why are you in the crypto market? What made you get into the crypto market? I'd like to know. For me, it's simple. I had Bitcoin, thought it was garbage, sold it. I didn't understand it. I was more concerned about understanding of what I could or could not do with it. I regret that. But in trading and investing, your regrets and mistakes of yesterday are the foundations for your future gains. Everybody knows that. Until you've had your first massive margin call, your first lesson, you're just getting lucky. The world is in the AI kilowatt battle. We went over this in a video earlier this year. We see routes of energy lines changing. The world and the chessboard is forever changed now. It's not going back to what it was 6 months ago. It's not going to happen. So the more you fight this is like swimming against the riptide. It will suck you out and you will get chopped up like sushi. But if you want to learn how to take advantage of all this and position your family ahead of what's going to happen, come and join the Crypto Republic Desk monthly on our Patreon and join over 550 active traders and investors who have decided that they don't want to get up with sushi and they want to take advantage of what's happening. Because look, I don't think many cryptos are going to survive what's happening. I was on the phone with my first client ever talking about this. I don't think most of these cryptos surviving. I don't. If you look at the nature of the crypto market, it tells you a lot of things. It does. I've been taking things out of the ground in different parts of the world for 20 years. Most people will talk about a lot of things, but I doubt they've ever seen what goes into actually extracting metals out of the ground and refining them. I think the fact that XRP is still standing is a testament to itself. Whether it's going to go to this heights of what people think it's going to, I wouldn't even be in that discussion. Understand that down the road, it's going to be extremely valuable. That's why I harp on XRP, ICP, and HBAR. Those are the three cryptos that we like. And there's a lot of reasons of why. Holding on to cryptocurrencies right now, when they're down, is rough. It'll test your mettle. But that's like in the natural resource concession industry, holding on to ground when the asset in the ground that you want to extract is underwater and upside down. We get phone calls every day in Indonesia for all the sulfuric acid that we can give that are byproducts from the refineries that we run. I remembered how hard it was to start our first solvent extraction electrowinding. I remember. But I also remember how good it felt to be right. I'm not saying that these currencies are going to go up tomorrow. I am telling you these cryptocurrencies will go up in the future. When Operation Printed to Win it begins, because the only way the United States is getting out of the situation is to export itself out, devaluing the dollar, all the U.S. assets will increase in value. Not financial advice, just my own opinion. I ain't taking any capacity. When that happens, all of this shakeout and craziness is going to look like we have went on an airplane in turbulence on a way to a vacation. Because make no bones about it, change is coming. You got to ask yourself this. Why are you in the market? I love being a financial mercenary. I love making videos and coming here. And I apologize for the video this morning. The phone kept ringing. Why I make mistakes. I'm not an AI person. I'm a regular person. Okay? You got to understand something. The world would change. I'm not one of these camps that thinks AI is totally taking over. I think it will take over the way that finance is run. So I look at coins without a utility as garbage. I will have a debate about this with anybody. Because if it doesn't have utility, it's garbage. That doesn't mean you sell it. It just means in the future, I don't think 99% of these cryptos make it if they don't have outright utility. It's going to be like the dry season in the Serengeti. You're going to see the larger fishes become cannibalistic and eat the smaller ones when there's not enough oxygen in the water, and it becomes mud puddles. I've seen this in the resource conflicts and wars that only one comes to know too well when you're involved in mining and refining in areas that people can't even find on a map. The strong survive here. That's why being a financial mercenary is something that you decide to do. Because at the end of the day, finance itself is just numbers. And numbers go on forever. I'm 47 years old. I don't know what the kids in college today would be learning to do. You got to ask yourself this now. If you're not preparing for the future, what are you preparing for? I mean, they're going to print so much money to get themselves out of this and export themselves out of this. That's why when Operation Printed to Win it begins, will be written about in textbooks. The Chinese economy is a lot worse than the U.S. economy. See, I love that when you can apply this because you've lived in these places and you see what goes on and you've lived through this. You've lived through it. But you got to ask yourself this question. Why are you in crypto? In the United States economy right now, if you don't have money in the equities market exposed to assets, you're not capitalizing off of what's happening. That could be because you don't have enough money, and that's disappointing, and I sympathize for you. You're not taking advantage of a 401k match. You haven't set up a Roth or a self-directed IRA. But it's never too late to start. So what cryptocurrencies offer you is an opportunity to be involved in the greatest transformational period in the history of humanity. This is as big as they come. And in our lifetime, this is the main course. The table's set. We like cryptos with utility. We follow the commodities market. And why? It's boring, but the consumption and distribution and the utilization of commodities is what humanity is over, and the foundations are. What's your house made of? What's your car made of? How did it get there? Where's it from? They will look back and say the same thing with cryptos. But understand this. Why I rant and rave about these things is because the retail person doesn't get access to certain types of guidance. They just don't. If you found this channel and you're here and you're still listening to this, do subscribe so you can hear the continuation of these conversations that we have at the end of each video, because it's an ongoing story. I don't think that there's even going to be any deal in the Middle East, personally. I think it's a giant seesaw, and you can trade the ranges, but the accumulation is a period of time that's going to disappear. They think rates were going to be higher. We've been in the camp that rates go higher before they go lower. We're in the camp that metals go lower. We're bearish before they go higher. 24 months, we're looking at a new world. That's what it is. But the commodities boom is here. I've worked commodities since I'm 15 years old in the full New York Mercantile Exchange. I know this better than, I have forgotten more about the commodities market than most people ever know. But it's not a competition. You're in a competition against yourself. You're in this game for yourself. You're in this game for your family. Because make no bones about it, 10 years from now, the world is going to be a very different place. Ask yourself this: what's more important to you? I'd like to know in the comments, because I can always see who makes it to the end of the videos by the comments. What's more important to you? To sit here and cry and complain, blah, 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 blah. XRP is going lower, blah, 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 blah. Or to have the ability to have had the chance to participate in the greatest transformation in human history? Is it more important to sit here and be disappointed about how things don't happen overnight? Or to have the ability to be involved, the chance to be involved? Because after this, the next chance is going to be in space. And I told you why I love HBAR. HBAR is involved with SpaceX. HBAR is involved with ICP. There will be business between Earth and the moon. On the moon will be military. It's coming. But for a price entry point, unfortunately, most people are priced out. Crypto still gives you that access. Ladies and gentlemen, I love you all very much. I want you to have a blessed evening. And understand something right now. As we see trade routes change, pricings change, challenges to the US dollar, all of these things happening in concert, back and forth, back and forth. If you're writing these things down, it should make sense to you. Okay? If you're paying attention, it should make sense to you, right? Why, when oil is high, they say peace is coming and it crashes. Then when it's low, we say we're going to have to do whatever. Blah, 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 blah. I don't even know anymore. And then when that relationship happens, we see what happens with the DYX. And then the DYX, makes its move. We see what happens with gold, silver, platinum, palladium, copper, constant copper. Anything that has an ETF has got something. That's why the cryptos we like all have ETFs, except for ICP. ICP is very special, and that's why they have a relationship with HBAR. But XRP is the anointed one for where the world is going. Ladies and gentlemen, if you want to learn how to take advantage of all this, come and join us Crypto Public Desk Monthly. This content is for informational and entertainment purposes only, should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up to the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. If this opened your eyes, smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the public. I love you all.